I want to welcome back Kirian, Deso von Hest'S, who gave us 10 assets to look forward to in 2021. And so now we're going to look back on those assets and see if there are any updates for 2022. Welcome back, Deso.
Well, I'm glad to be back.
Great. So let's talk about the first asset you gave us, last year. You talked about rare earths and you were bullish on rare earths, and one company in particular was Lynas Rare Earths. And the performance so far in 2021 is up 100%. So congratulations there. Do you have any more updates on rare earths?
Well, first off, thank you very much. And second off, yes, let's talk about what happened this year in rare earths so far. There hasn't been a lot of action in terms of news, but the most important two news tidbits, the first one hit right in January, where China announced they were tightening regulations on the rare earth market. So this is in line with my expectations that eventually there's going to come a rare earth export ban. And I did say at some point, I can't exactly remember, that I expected China to pull some shit in 2021. Well, it didn't take long at all. And the second piece of news, actually, it's been quiet for quite a long time on that front. But recently it was announced that China is consolidating basically all its rare earth companies into one big state-owned company. And this just continues downwards the path of preparing for an export ban. So if you want to have a successful export ban, you must first be able to control your exports. Because if the smugglers just export just as much out of the country behind your back, well, all you're really doing is hurting your own tax revenue. So I expect more shenanigans in the same way in 2022, simply because it's all driven by financial fundamentals. Commodities have been going up in price this year. They will continue to go up in 2022. Be mindful of corrections, though. And volatility, of course. But in general, stuff is getting more expensive for the Americans as well as the Chinese. So eventually, well, we've seen companies prioritize their own market in several commodities now, primarily energy. Eventually, the same thing will just happen to rare earths.
Absolutely. Actually, one thing about rare earths is, like you mentioned, there's like this geopolitical drama with China and the United States and export bans and whatnot. So do you see any just more tension increasing between China and the United States, or anything potentially there geopolitically?
Yes, because the same thing that was driving the tension so far will continue to drive it. Both countries messed up in the pandemic response. As a result, well, we now see the inflation I was talking about a lot last year. So each country basically needs a bigger enemy than its own government as far as the people are concerned. For China, that means the US, and for US, that means China. Well, also Russia. So now it's more or less a Russia-China axis that the US is pissed about. But it doesn't really matter. I mean, we're talking about sides here, and it's clear on what side the Chinese are and what side the Americans are. So that's how the export bans and tariffs and such will divide themselves in the future along those two sides. And I have to say, it's not just tariffs and export bans, but it's geopolitical games such as what we're currently seeing with the energy crisis in Europe and, Gazprom, Nord Stream 2, all that jazz. So it's a lot of geopolitical games that don't necessarily mean the price of something will go up or down now, but it will in the future.
So you're still bullish on rare earths. And just another one that you totally correctly predicted was uranium. Obviously, everyone knows about that one. The North Shore mining ETF for the year was up about 70% year to date. So are you still bullish on uranium, or any updates?
Yes. So the company where I place my bets hasn't run up that far yet, but that's simply because they were doing research and their tests have successfully completed ahead of time. So I'm happy about that. But in general, just for the general uranium markets, I am still bullish long term on uranium. And at this point, anybody who isn't is a fool. If you just look at how much has changed in 2021 for the macroeconomic situation of uranium, how many countries now are first, like at the start of 2020, a country like the Netherlands, my home country, didn't want to have anything to do with nuclear anymore. And now at the start of 2022, it's now become their basis play for clean power. Well, there's still going to be a lot of invested in wind and solar, of course. But now they're keeping open the last nuclear reactor we have, and they're planning to build 2 new ones. That's a material change. France has completely changed from more or less keeping nuclear stagnant to actually building new nuclear reactors. Currently, Germany is the only holdout, and the power prices are just going to force their hand, just like they forced everyone else's hand. So the supply deficit in uranium is still real. Starting up a new uranium mine, even when you know you've got stuff in the ground, isn't that easy. It takes years. So even though we've got plenty of uranium in the ground, there's a large spread between how much we've got in the ground, how much we need above ground, and how fast we can get the stuff out of the ground. And that discrepancy is just going to widen until everyone catches on. And I'm afraid that's not going to happen until the uranium price does the same thing as what the European gas prices have been doing. That hasn't happened yet. It's gone up 43% year to date. But eventually it will happen, because if it just runs out, it just runs out. Same thing as with gas. So I'm still bullish.
Excellent. So that's your second asset for 2022. You're still bullish on.
And I do have to say, expect more volatility going forward. So bigger spikes up, but also bigger drops down afterwards. But it will still go up over the years in general.
Great. And so the third one, another one you successfully predicted, was crude oil. It started off the year at like $50 a barrel. And now, as of this recording, it is $73 a barrel. So very successful there again. But I did want to ask you, because this one's a controversial one. You have people like, very influential people like Raoul Pal of Real Vision and Cathie Wood, all thinking this is just supply chain shocks. This is transitory. This is a joke. Like, they're going to get the cost of energy down to zero with new technologies, and you should only be investing in AI and crypto, essentially. So oil is a controversial one. What is your take on that and the transitory inflation argument as a whole?
Well, first off, let me say that in oil, my prediction was mostly correct. So I figured it would stay at around $50 a little bit longer before running up to 80. Instead, it ran up to 70 almost immediately, fell back down to 60, went up to 80. Now it's back at 70. So it's been a hell of a year for oil. I expect it to go up further in the future, but it's going to get weird. We'll talk about that in a moment. But since you mentioned Raoul Pal, and I know you would love for me to comment on this, I called him a charlatan on Twitter. And after he said I didn't understand his tweet, and then I proved that he didn't understand his own tweet, he blocked me. If he starts talking shit about me, go ahead. I'm blocked anyway. Can't see.
Right.
As far as Cathie Wood goes, I've already made a large Twitter thread in April calling her an idiot. And I recently wrote another article calling her an even bigger idiot, because she's absolutely not looking at any fundamental value in companies, or she's not analyzing the balance sheets or anything. She's literally just looking at companies that went up a lot in revenue. So just to comment on this, my last article, I have a Substack now, desogames.substack.com. I write articles every so often. And my latest article goes into Teladoc Health, which is one of Cathie Wood's biggest positions. Now, Teladoc Health has $17 billion of assets on the balance sheet, of which $14.4 billion is goodwill. Now, for those of you unfamiliar, goodwill is an intangible category or intangible category, which contains stuff like brand name. So you can't really value brand name, but you kind of want to put a number to it anyway. So as you imagine, there's a lot of leeway there. However, to have basically 80 to 90% of your company consist of goodwill, that is really weird. So I dove into this and I found out that they added that much goodwill to the balance sheet, about 13 billion of it, in their December quarter of 2020, or well, the last quarter of 2020, and it wasn't there in the September quarter. So in October, Teladoc Health bought a company called Livongo Health. Now, Livongo Health had $1 billion worth of assets, and of the $1 billion, about 850 million of it was cash. So how does that company lead to 14 or 13 billion extra in goodwill? Well, the market cap of that company was about 14 billion when it got taken off the market. So what really happened there is that Teladoc Health, which is basically just a cash pile company, bought another company, which was basically a cash pile company looking for an exit scam. And they basically unloaded all their value onto unsuspecting investors like Cathie Wood, because there's just nothing there. That 14 billion of goodwill definitely isn't 14 billion. Maybe it's 2 billion, maybe it's 3, I don't know, but it definitely isn't this much. So that company's already gone down from the point where I first looked at it in April, where it was something like $130. And when I wrote the article, it was $100. And then it fell to 90 not too long after, and with a 14% short interest. So the market cap is already 15.3 billion when their balance sheet says they've got 17 billion worth of assets. But 14.4 billion of that is goodwill. It's a mess of a company, but she invests in this, and it's not just one company either. I called the article "Goodwill Hunting" because I just went hunting for excessive goodwill, and there's a movie of the nearly similar name, so that's fun. But she's got many of these cash-rich companies, which are supposedly high-risk biomedical plays. But they're really not. All of them are companies that are looking for a good deal in the markets to buy up, and that way creates value for shareholders. But those good deals just aren't there. They aren't there on the top of a bubble. Well, on the top of a bull market, they aren't even there. But if you're in a mania or a bubble, they definitely aren't there. Which is the same reason why Cathie Wood keeps saying that there isn't a bubble, or at least if there is, there aren't in tech stocks, because if there is, she's extremely screwed. She's invested everything like we're at the bottom of a market. Because, at the bottom of a market, you invest in cash-rich companies, which then buy up companies which are deeply undervalued, and that's how you make a shit ton of money. So her strategy isn't wrong. It's just timed at extremely the wrong moment in time. So everything they say about oil, just to bring it back to what we started talking about, you can just disregard, because they're looking at, I don't know what they're looking at, but whatever they're looking at has been tailor-made to support their own narrative. As far as oil goes, at the start of 2020, it was simple. It was going to go up because of supply deficits. Now, however, now that oil's already gone this far up, it's a little bit more difficult to predict, because you're going to get into geopolitics. Again, like I said, I didn't expect it to go up beyond $80, because above $80, shale becomes, or US shale becomes viable again. And OPEC doesn't want that, because they're making money hand over fist as Russia and Saudi Arabia have got like $20 a barrel pump costs. So at $80 a barrel, they're making plenty, and they want to keep it this way. So on the one hand, oil is going to get massaged down every time it comes near 80, simply because OPEC wants it that way, and because inflation is now hitting the general consumer. We've seen Biden comment on the high gas prices, and I definitely believe that the panic that happened around Omicron and oil dropping $10 in nearly a day, that is more political than actually a panic. They just wanted the oil price to drop $10 because gas prices are getting out of control. That's the kind of thing you have to expect in markets now. I wish I could say it's all technicals and no manipulation, but we are nowhere near that anymore. So is oil going to go up? On the one hand, yes, because inflation is just going to continue. So all prices are going to go up. But is it going to outrun inflation? On the one hand, as a commodity, it should. But on the other hand, once nominal numbers get too big, especially if wages and profits don't keep pace, well, then people just can't afford the higher price. And then you start getting demand destruction like you get with all higher prices. So that is going to keep oil back. And it's hard for me to say where it's going to end up. At some point, it'll spike because there's also underinvestment in actual exploration. So the physical amount of oil that we have are going to have and that we need, there's a discrepancy there, same as with uranium, especially if we get any sort of a recovery along the way. I mean, a recovery right now is like one of the most deadliest things for the supply chains to happen. So is it going to go up? Yes. Is it going to go up faster than inflation? And will you make actual money? Yeah, hard to say. Hard to say. With something that's as widely used as oil, there will be a lot of demand destruction as well as price increases. So it might actually just go sideways.
Fair enough. That's a very measured approach to looking at oil. I mean, because a lot of people do talk about oil, they say it's underinvested. There's going to be a supply crunch because the developed economies are not investing enough in it, and they think renewables are going to save them, and even uranium. But they're totally forgetting how China and India need oil desperately, and how there's going to be kind of a supply crunch in oil. But you're absolutely right that it is at a high price already, historically. So
yeah, well, it's just, if there's anything to take away from this video, it's that going forward with all this money printing happening, and as soon as we get a crash, they're just going to print more money to prevent that one and inflate a bigger bubble. You can't talk about profits in the simple manner of, oh, it went up or, oh, it went down. Even if something's going to go up, if the value of the currency drops faster, you're still losing money, because if you measure it against other commodities, base commodities, which always have an extremely high demand, and we try to fill supplies as best we can, like say wheat or any other foodstuffs that are, rice, that kind of stuff. Well, you're going to start off with, say, oil at $70 a barrel, and at that price, you can buy 100 breads for it. And then later it's going to be at $80 a barrel, and you can buy 90 breads for it because bread just went up faster. So at that point, did you make money? Well, technically, yes, but actually, no.
Absolutely. Yeah, that's a great point. And we will talk about currencies and the denominator to all these soon, because that was one of your predictions, which was talking about how to treat currencies. So far you're 3 for 3, very successful. And if anyone who had a crystal ball would look at 2021 and say, okay, that's the inflation situation, I'm going to be bullish gold and silver. You were bullish gold and silver at the start of the year, and they have underperformed, and people absolutely are pissed. They hate gold and silver. The sentiment could not be worse. what is your take on gold and silver going forward?
Yes. So first off, everyone who invested in gold and silver wasn't wrong. It's everyone who saw the CPI blow out to 6.8% and didn't go to silver. Those are the people who were wrong. The problem is there's been massive manipulation in the markets of gold and silver. I understand why people hate it. It's because the price went down. Silver year to date, something like minus 14%. Gold's like minus 5 or 6%. While everything else, like crypto, has gone through the roof. What gives, you know? So let me run you through the year of gold and silver, because after it's one of the markets where I'm regularly active as opposed to just making a yearly prediction. So in October of last year, I wrote an article about the manipulation of silver and COMEX in 2020. In that article, I predicted at some point there would be a massive investors out of nowhere who would just buy silver because the discrepancy was getting so big, and they would clear out the bullion dealers in a day. That happened. It happened in January, and I think it was January 27th, when the silver squeeze happened, along with when GME and AMC went up. But people targeted silver too, because they know somewhat about the manipulation. They know it's undervalued. So it became a target, and bullion dealers were cleared out in a day. Andy Schechtman, who you've also had on, still talks about how he went naked exposed into the open after the weekend, and he had to shut down his bullion sales for the first time in a couple of decades, simply because the demand was so big that if the price moved too much when the market opened on the Sunday, he would lose hundreds of thousands. And he still lost like $35,000 by keeping the overnight sales from Friday to Saturday open, and he had to close them on Saturday. If he had kept them open all weekend, God knows how much money we would have lost. And he's one of the few who actually saw my Palisades video and believed it. So he actually got advanced warning about something like this happening. It still happened. So first off, at that point, I was right. But then what happened, or one small little difference that happened with my prediction, is that it wasn't a mass or of people who weren't connected. It all happened via Wall Street bets. And since there was the central source of people rushing towards silver, once that central source got manipulated, it turned people away from silver. So overnight on Wall Street bets, the posts promoting silver, including a post with like 75,000 likes or upvotes or something, got removed, and posts that said that silver was a hedge fund ploy to distract attention from GME got improved and promoted. So sentiment on Wall Street bets changed overnight, and that killed a lot of the demand in silver. But within that 1 or 2 days that they actually piled on into silver, what actually happened in the markets is that SLV went up 110 million ounces of silver on the balance sheet. This was a lie. It took a few months to find this out, and after Wall Street bets basically banned silver, Wall Street Silver got created, which is still around, and I would highly recommend anybody on Reddit to check out Wall Street Silver. And they've tracked what's been happening to silver ever since. And it took like 3 weeks or a little bit more. I'm not exactly sure on the time frame anymore. But by the time all those 110 ounces of silver that got added to SLV were removed from SLV again, then the LBMA admitted that they lied about how much silver they actually had in the vaults. They called it an accounting error. They lied about 3,000 tons of silver, something like that. A ridiculous amount of silver. It should have been world news. But since it happened 3 months down the line and everyone was focused on GME, and nobody really reported on it. But it's part of history, and thanks to Ronan Manley, we know this because of his research. Yeah, the LBMA just lied about how much silver they had in vaults to the tune of 110 million ounces of silver. And when the balance sheet had quote unquote corrected itself, well, then they fessed up. Only they never said it was a lie. It was a accounting error. Sure, bud, sure. But that's not everything. That was just the start. So aside from, the other stuff like Goldman Sachs trotting out Jeff Curry onto CNBC saying the ETFs are the shorts, or JP Morgan downgrading gold, the system just fought back. Now, Wall Street Silver has also been fighting back, but the system is large and basically has access to unlimited amount of dollars. So that's a problem. And I can actually prove silver manipulation to anybody watching this. You can do this at home yourself, because since May, they've been slamming OPEX. Just go Google options expiry calendar. You'll probably end up with the Market Watch options expiry calendar. This is just general market expiry of options. You can see the calendar for 2022, 2023, 2024. It's been around for ages, I think. If you then pull up a silver chart, you look for the days on that calendar where it says options stop trading. And either for that day or the day before, ever since May of 2021, the silver price has dropped precipitously on the day that options expire in the general market or the day before. It started happening in May. It was most pronounced in June. The big slam down in June was on an options expiry day, or just the day before. I can't remember. But the only date on that chart that didn't line up with the slam was June quarterly options expiry. But the June options expiry, the July options expiry, the August options expiry, well, in August, it actually dropped on the 8th, but, macroeconomic situation, if they can find a panic to make use of, they will. But it bottomed on the options day expiry. In September, it dropped on options day expiry. On September quarterly expiry, it dropped again. That was the recent bottom at the start of October. Then on October, options expiry dropped again. At that point, I didn't think it would drop again until November options expiry, but the COMEX futures expiry, or the COMEX options expiry, because COMEX trades options as well as futures, those expire on a slightly later date. So the general market's like the 20th or something, and COMEX is more towards the 25th, 26th or something. So in October, they also started slamming the COMEX's own options expiry because it lined up with that date. So the reason why everyone hates silver and the reason it's gone down so much is because on the COMEX, they can make naked shorts, meaning contracts not backed by any metal, and then sell them into the market, which depresses the price. Since they can print these amount of contracts unlimitedly, basically, they can just literally keep dumping unlimited amounts in the markets. Now, when is this manipulation going to end? When people wake up and try to get the fuck out of the system. Don't buy SLV, because that's how they tried to silver squeeze in the start of 2021. And that's how it failed, because they simply lied about the amount of silver they had. They never had to buy any of it. So just buy physical. Physical takes place in reality. If you buy a silver bar and you keep it in your house, then there's no way in hell that bar going to end up on the COMEX's balance sheet. They can't. So they can make more naked shorts. They can make more paper. But silver is also used in industry. So eventually, the silver will drain from the vaults if no new silver arrives, because it's being sold everywhere else for a premium. And the COMEX still has contracts to deliver to. When it crashes, the futures price, well, I can't even tell you what will happen to the futures price, because technically it should go up, but they're so manipulated, it could very well be that the futures price never moves and that the premiums move up with tens or hundreds of dollars. So we might end up with a silver price, that's like $200, but in actuality, it's $190 a premium, and the futures are $10 a contract. It's not even an ounce, it's just per contract then. So why do people hate silver so much? Because you were taught to hate it. You were taught to hate it by the system, which is now rapidly approaching hyperinflation. I've been warning for hyperinflation since April of 2020, because the M1 jumped with 10% a month, which was at least the start of the definition of hyperinflation, is 10% a month inflation. Well, if you create 10% more currency a month, you have 10% a month inflation. You don't know where the currency is going, but you know the inflation's there. So the US has already experienced hyperinflation. And then they retroactively, that's something people might not know. They retroactively in 2021 changed the M1 and M2 money stock measures of the US back to May of 2020. I understand why, because in November of last year, the M1 started going up with a couple of trillion again out of nowhere. So that means the start of more inflation. And what's the CPI done this year? So why is gold and silver still down this much? Because it should go up. And as long as it doesn't go up when it should, people will disregard reality just to find an answer. But the reality is it's manipulated.
Fair enough. So you are still, you're bullish physical silver for 2022.
I am extremely bullish on physical silver, gold, and platinum. Everything that's happened in 2021 just means that the problem has gotten that much worse. Yes, you've not gotten rich off of buying silver and gold, but everyone listening needs to understand one thing, and needs to understand this very, very clearly. I am not a gold bug. I am not a silver bug. And when you buy gold and silver, you're not going to get rich. I still am telling you, you need to buy it. Why? Because everyone else is going to go poor. And with the concept of rich, it simply means that you have more wealth relative to everyone else. So if you have $10,000 in your bank account, you might think you're not rich. But if everyone else has only $1, you are very rich. With gold and silver, it's going to be the same way. Not a lot of people have gold and silver, especially not when it's hated this much, especially not when it's not going up when everything else is, because everybody is investing in everything else. I just see an opportunity to buy more silver for the same amount of money, and I'm happy that it's still cheap because I am poor. I'm still poor. I started out. Look, I got a lot of things right, sure, but I'm not running a hedge fund or something. I'm just one guy behind a PC in the Netherlands. That's just it. My personal wealth is very low. So obviously, if I double my money, I'm still not rich. I can double it 5 times and I'm slightly becoming rich, So I'm happy that it's still not down, because it means I get to save more souls. Or that's still down because I get to save more souls. But eventually it will explode. And when it does, everyone else is going to go poor at the same time, because the value of what they have drops, even though the number stays the same.
Yeah. Yeah. And so that's a big prediction, obviously, right? That, that most people are going to get poor. And so do you foresee kind of an explosive event happening in 2022, or is it just like something you can't time?
No. What people really, really, really need to understand is that hyperinflation is not an event. It's a process. I've been saying this a lot over the past year. I've said it a lot in 2020 as well, only now it's starting to look a lot more real than it did before. Simply because it's a process. It's inevitable. It started in 2019. Well, technically, I can trace this thing back all the way to 1920. So if you want to argue about when it started, we can argue about that for hours. But if you want to take an event where it became inevitable that we ended up in hyperinflation, that has to be the repo prices in 2019. Because the repo rates blew out. They had to start up QE again. They had to print 60 billion a month. And I've had this conversation with multiple people many times. If I ask you, do you think they could have stopped QE in November or October of 2019? And would the repo crisis have returned if they stopped? Well, everyone consistently answered yes. The problem would have returned had they stopped printing money. Well, you can continue to answer this question for every single month going forward. Will the problem return if they stop printing money? Well, they're trying to stop to printing money now. Taper will end by like March. By May next year, the main central banks, like the EU and the US, won't be printing any money anymore. So yes, the problem's going to come back. Again, it's part of a process, so I can't time it. It's these kind of events like a market crash happening, the powers that be reacting to it and printing much more money, which will lead to a higher inflation rate. It's those events that are changes in the line on the chart that we'll be looking at in 10 years. But the trend line between those changes, that's just the situation we're in now. Currently, there's a slow trend line up, which is giving more and more and more inflation. And after the market blows up and they have to print more money to recover it, or the entire economic system dies, well, then the line is just going to go up faster over a period of time until something blows up, and then it's just going to accelerate faster. There's going to be a lot of volatility too. Sometimes the currency is going to appreciate against all logic, and gold is going to drop, even though like gold's already gone up to like 20,000 an ounce, and then it goes down to 15,000 an ounce. And you're going to be like, what the hell? But stuff like short squeezes happens. Just the Turkish lira, perfect example. Perfect example. Right now, no one in their right mind still trusts that the lira isn't going to hyperinflate. Yet the other day, it dropped from 18 lira per dollar to 13 lira per dollar in a day. How the hell's that? Well, short squeeze. Simple, short squeeze. There's so much money about that so many people got to short against the lira that the moment Erdogan mentioned that he is somewhat open to other options, which he isn't, but he just off the cuff did a mention. Well, all the shorts got killed. So that's one of the reasons why I always say, if you're shorting, keep your stop losses tight and short often and take your profit often. You're going to get taxed on it, sure, but shorting is not something you do as a value investor. Shorting is something you do as a day trader, or if you're in the market all the time. If you want to just buy and hold, well, you have to buy and hold. You can't sell and hold. That doesn't work that way. Yeah, shorting currencies can be very lucrative because of all the leverage involved. But at the same time, a correction will kill you. But if you look at it over an even longer time frame, it's still up at 13.5 lira per dollar. So that's much higher than the 10 it was. It's still down on the year. It's going to be extremely volatile. So you gotta watch yourself. But the same thing will happen to, other well, we should get into currencies actually.
Yeah, absolutely. So one of your calls had to do with shorting bonds and currencies because of the potential hyperinflation you were seeing. Do you have an update on those?
So at least I was right on US bonds for a very long time. I still am, I think, on the year. So we saw a US bond collapse in January, February, I think it was, as predicted. They haven't gone through the floor, but it's a large market, and we're at we passed the top of a 40-year bond bull market where the price of bonds has gone up and the yield on bonds, the interest rate, goes down when the price goes up, and in reverse. Well, that has reversed. So, uh, well, the US bond market is just going to perform worse and worse and worse over a longer period of time frame. Now, it seems currently that we're headed for a yield curve inversion, which I expect to take place between, I don't know, 1.5, 1.3%, somewhere around there, more or less using the US 5 or 10 years as a pivot point. But here's the thing. I'm not sure that the yield curve will go back to non-inverted. It's possible to look up the yield curve of Venezuela. I think worldgovernmentbonds.com still has it hidden somewhere on the page. It might surprise you, but the Venezuela 30-year yields, I think, about 7%. How can that be? That's way too low. Well, that's because it simply goes bidless. At some point, lending money to a country that is hyperinflating at like 10 or 20 or 30% a year, you're not going to give them money at 7% for 30 years. That's just completely insane. And because it's completely insane, what you expect happens. Nobody does. Literally nobody gives money to a longer date anymore. But the country still has a need to finance itself. So they will still put out bonds. They'll just put out whatever bonds people will buy. So if you look at the Venezuelan yield curve, then the 20-year bond is 7.9%, but it never changes. The 15-year is 11.5%. The 5-year is 81.7%. And the 2-year is 92,571,000. Oh, no. I got that wrong. There's a dot there. I think it's 92,571%, 0.43. Well, 92,000 is not something anybody can afford. But the point is that when the Venezuela bond market finally broke down, the longer dated bonds just went bidless first. And then the shorter dated, and then the really short dated, until the entire market just, well, died. And the same thing will happen to any currency or any, the same will happen to any currency that is hyperinflating, which is tied to debt, which is, basically all the major currencies in the world right now. So I'm not entirely sure that when the yield curve of Western nations like the US or certain EU nations inverts, I'm not sure it's going to go back, because the long end is just going to go bidless and the short end is going to go up.
Right. Well, you definitely did correctly call the US bond market weakness. So that is a win. Absolutely. And what is your overall take on the US dollar? Will they be able to pump it up in 2022 and keep the bond market slightly afloat? Or, like you said, you still expect it to be weak in 2022, right? And bonds?
I expect bonds to be in a secular bear market now. So it's just, they're just done for. We've had a 40-year bull market. There's no bull market fundamental right now. The only reason, there's still volatility, so bonds can still jump down in yield or go up in price when there's a quote unquote flight to safety. But eventually people will catch on, even the algorithms, that the US bonds just aren't safe anymore. So maybe in some future date, after they've already gone up in yield quite a bit, you'll see a moment where they go down in yield quite a bit when people expect suddenly the market to recover. But it won't, because the fundamental reason won't be there. It's just more hope and mania. And then later, just the yield proceeds up again. So, yes, I expect trouble, but how much trouble, where it's going to go from here on out, I don't know. I just know over the longer term, uh, this next decade, the bond yield will go up and the price will go down, simply because that's the macroeconomic fundamental situation now. Bonds are worthless for a very, very simple reason: supply and demand. It works for literally everything, including debt. If you've got too much debt and the demand for debt doesn't keep pace, mainly because the people already have too much debt and they can't service it anymore, well, then the demand for debt goes down while the supply of debt goes up, meaning debt becomes worth less. Now, that's partially the point now, because we have so much debt, there is no way out except for making it worthless. The problem is the currency is tied to the debt. So if the debt becomes worthless, what's backing the currency? Just ask yourself, what is backing the currency of the United States if it's not gold? Because even a gold-backed standard, the amount of gold you have backs the amount of currency you have. You print more currency, but you don't add more gold, then the value of the currency per unit drops. The same thing happens when the currency is backed by debt. If the value of debt per unit drops, well, the value of the currency itself as a representation of value also drops. And you need more currency to represent the same amount of value. So just because of too much debt.
There you go. So fair enough. Moving on, you also called for you're bullish on nickel and cobalt. Nickel's up about, I think it was like 17K per ton January 1st. Now it's 20K per ton, and cobalt absolutely skyrocketed. It more than doubled in 2021. So more wins.
Yes. So I don't have any particular updates for either. Nickel's up like 19%, and cobalt's up 120% on the year. Well, it's the same situation happens. The world wants to go towards EVs. Well, that requires batteries. Batteries have as much nickel as lithium. Lithium, by the way, also did very well this year. It's up 432% on the year, or year to date. So, yeah. Well, as I've said before, though I don't know if I said it in the previous video, if the world wants EVs, well, then the world needs batteries. And if the world needs batteries on a large scale, then you need materials on a large scale. We don't have that. Those industries just aren't ready, especially not because mining is the most dirty industry we have. And we're all about the environment now. So if you want to start up a mine, you have to get environmental permits and all of that. And if they get stricter because we love the environment more, well, there's just less mine, or it takes longer to start up a mine. So if the entire world just jumps on EVs and we don't mine the material out of the ground more or scale it up at the same speed, well, prices just go up. And cobalt is just going to, well, cobalt has gone up more than nickel because nickel is more abundant. But the idea of a cobalt-less anode or cathode, or what the hell it's used for, that's just a pipe dream. Because while there are solutions, innovative solutions that will be brought to market eventually, it's the eventually that's the problem. It's the scale of the problem that's the problem. So on both, I'm not sure if they will rise as much as it did this year. And that's just a theme that you will see for just about anything in this video except gold and silver, because they've gone down when they should have gone up. Anything else, there's just no more deals to be found. It's just no more. Like, if you want to ask me, is cobalt going to go up further? Well, I'm looking at the all-time chart here. It's based, well, there is still upside because in 2018 it was more expensive, but it's still already very high up in average. As we know, the cure for high prices is high prices. But the reason people say that is because when the price is high enough, people will start looking for more resource deposits. The economy in general grows larger, supply increases, and because there's more supply at the same demand, price goes down. If supply increases but demand increases faster, price will continue to go up. If then halfway through the year, because of this, EVs become unaffordable and the pipe dream drops and everybody realizes, oh, sure, we can have EVs, but by 2075 and not 2030, well, then cobalt, ironically, is going to drop in price again because a lot of front running has just immediately vanished from the market. So I would love to just do the same as last year and say, this is going to go up and that's going to go up. And I do have a market later that I expect to eventually go up, but it's now become a right time to invest. But in general, again, aside from gold and silver, there's no deals out there. There's just no deals out there. It's horrible.
Yeah, exactly. It's so hard to just assume that cobalt's going to continue going up. It really is looking at that chart. So are you kind of more neutral on the commodities that have already spiked like crazy?
Kind of. Yeah, I mean, obviously I'm more neutral on commodities that have already gone crazy, but at this point, it's not... everyone's a genius in the bull markets. We've seen that with Cathie Wood, but we're going to see that now in commodities because we're now in a commodity super cycle. So a lot of commodities are going to go up and everything is going to go up somewhat. So there's going to be a lot of geniuses now, but not every commodity will actually go up as fast or spike up as people would expect it to, or again, with move up faster than inflation. So to give an example, a good one, I'm still very bullish on copper. And you might not expect that with the Chinese property market now cratering and that being historically one of the biggest uses of copper. Well, the reason why I'm still bullish on copper is, aside from the property market, it is also used in EVs. It's used in wind turbines. I'm not sure how much it's used in solar panels, but I'm sure they're wired up as well. If you want to install solar or wind power, that's intermittent power, which means that you need a thicker copper pipe because you need overcapacity. Nations' grids everywhere are severely aged, so there's going to be a lot of infrastructure upgrades, which need more copper. And the amount of copper that we're pulling out of the ground, thanks to everything that's happened over the past 2 years, I don't think it's gone up that much, if at all. So demand's increased, but supply hasn't. That's going to come out of somewhere. Well, it's going to come out of inventory. And that's what we've seen. Copper inventories have been dropping precipitously. And I predicted actually in the middle of this year, or well, sometime this year, that copper was going to have a copper squeeze, much like silver did. And then suddenly, God, I can't remember when it was, like a month or two ago, it did. It went from $4.1 to 4.7 in just a week. Fastest rise on the chart in like a decade or two, maybe even all time. But after that, the LME, because the LME ran out of stock in London, they changed some margin rules and such. So the price went down again because, of course, it did. It's basically the same as the comics in the US, only even bigger. But that doesn't change reality. Like they too can make as much paper copper as they want. It doesn't change that we need copper in reality. There isn't enough copper out there. It's not being produced to the level we think it is. And that's depleting inventories rapidly. At some point, inventories are just going to say, no, we need some sort of strategic amount here for emergencies or whatever. So no mas. And well, then the price will do what it did last time and go from 4.1 to 4.7 in a week. Only this time it's not going to stop. And it's just going to continue right straight through the roof. So I'm not sure how to invest in physical copper. I suppose copper miners is the best way to go. But that's an example of a price that will spike. Corn is another one, simply because of supply cycles. If you look at the corn chart over the last 10 years, it shows it the best over the 10-year chart. Then at least since, I don't know, 2013, 2014, say, the bottom of the market in general, if you don't count what happened in 2020, It seems that corn has a supply cycle where the price bottoms out in September or roundabout, so August, September, October, and it spikes in May. So April, May, June, sometimes July. And between those two times, between May and September, it drops very quickly. Now, when you look at 2020, the price bottomed on August 3rd of 2020, and then it spiked up to May of 2021, and then started dropping again. And it bottomed in the start of September of 2021. The problem is that that bottom was at 500 US dollars per bushel. And on the all-time chart, $500 per bushel is near the top of the range, really near the top of the range. Only it hits the 1996 spike at the top, and only the 2008 and the 2012 spikes were higher. That's the bottom now, all right? That's the real problem. Since then, and ever since I pointed it out in another one of my Substack articles, the price has gone up from 500 per bushel to 600 per bushel, and it's continuing to creep up. Now, it doesn't have to spike in May. It can run up to that price over the course of many months as well. That's what happened in 2018, where it started running up in December, and it still peaked in May. And it didn't really spike, but it's still a linear straight line up. That's possible too, but this line is just going to continue to go up then until May. No matter which way you look at it, the corn price has to spike through the roof. And if it's any sort of relative to the previous spike, as well as to the lack of fertilizer out there, oh boy, the next spike is going to be legendary. And we might even have a new all-time high at $1,000 per bushel. But that is corn and copper, which are going up for, well, the same reason, supply deficits. But the spike is different because in copper, it's going to be the copper is just going to run out of inventory. And then we need to pull more out of the ground and rebuild inventory. And with corn, it's simply like, well, there's no real inventory to speak of. It's just a cycle that harvests whatever is produced at that time, and that delivers us a price, depending on whatever supply we got. And that real price ends up at somewhere in May. So again, we talked about oil already. If these prices continue to spike and that continues to ruin businesses, even in hyperinflation, businesses still go bankrupt and to zero, but it's individual businesses while the general market continues to go up. Well, if those businesses go bankrupt and they're farmers and they don't buy oil anymore to either for fertilizer on the land or to move their tractors about, well, then there's less oil demand, isn't there? So then oil goes sideways, even though through inflation, that means that you still lose money. So within commodities now, there's going to be a lot of difference in what does well, what doesn't do well. And you have to look at the utility of each individual commodity to see what it does.
So we've covered a whole bunch of your calls, but then the next one, which you called for, let's see, let me pick one. So shorting scams. And, you know, we all know you as a bear on the tether situation that did not explode in 2021. Do you have an update on that call?
So, yeah, we actually talked about this before recording, and I talked about penumbra in that video. Apparently, I have no memory of this because I've got memory problems. And penumbra hasn't crashed. That research of the short report, whether it comes true in the future or not, the problem with shorting scams is you have to time it right, because there's also a saying in the market, never short a Ponzi. The reason why is because shorting a Ponzi will get you a lot of money if you time it at the top. But if you don't time it at the top, well, the whole point of a Ponzi is that it's just going to continue to go up. as long as there are greater fools. So timing is of the essence. And there are some scams in 2021 that have blown up. I don't know if Nikola was 2020 or 2021, but that's one of the more known ones now, where they rolled a truck down a hill. That'll be a classic. I haven't tracked a lot of individual scams, so I can't really say if the market has collapsed in general. I do know that the issuances of SPACs has gone down quite a bit. So I know appetite is drying up. On the point of Tether, it's still amazingly, after a year's worth of time, capable of collapsing at any given moment. I think Elon Musk bailed out Tether simply because of mentioning Bitcoin and that driving a lot of legitimate dollars into the crypto space, as well as blowing that mania up further. I have seen an interview of Elon Musk where he wears a Tether shirt. So I'm not sure if he's aware of anything, let alone Tether. But, you know, that kept the scam going. But there's been so much, well, how do you call it? Wobbliness. When scams get towards their end, they become wobbly, meaning some sort of lie blows up in their face and they have to create a bigger lie to cover it, but not everyone will believe the bigger lie. And that's how you eventually run out of greater fools, because the lie gets too big and nobody believes it anymore.
To your credit, like, even if you know it's a scam for a fact, you still might not get the timing right, like you said. And therefore, like, even though the fundamentals are screaming short, who knows when it could blow up and what the trigger will be, right? So the timing is almost impossible to get right.
Yeah, especially since, Tether's a good example. I came across plenty of data that said in January that Tether was finished because Kraken was sputtering. The Bitcoin price wasn't always going up anymore. We already had a big spike and then drop in January. And then Elon Musk comes out of nowhere and just pulls a lot of legitimate money into the space. And the whole thing about Ponzi's is that's just a leverage scheme that blows up because of too much leverage at some point. So if you put more legitimate dollars into that system, well, they can lever those dollars up. And, well, that's just a lot of money. But the most volume in Bitcoin is still Tether. And if there's any indication now, better indication, that Tether is indeed the scam that I already said last year that it was, and others have said for many, many years, I would say go check out Bitfinex on Twitter. I mean, he says the same thing quite a lot, but that's because he's eventually right, and the regulators haven't moved on it yet. But that's another change from 2020. Everyone knows Tether's a scam now. Jerome Powell has commented on it. Janet Yellen has commented on it. The White House has commented on it. Financial regulators are now coming up with regulations. The SEC is on top of it. They're actually fighting over who gets to take it down now. So obviously, their days are numbered. But how many days are left? I still won't know. I wish I could just give a number.
Fair enough. And another one that you absolutely nailed 100% was shorting Rhodium. I don't know if anyone else was talking about that back in 2020, but what is your take on that going forward?
Well, I wanted to give a contrarian opportunity because, you know, it's fun to be a contrarian, but it doesn't always work out. You know, sometimes the crowd is actually right. But in this case, as you said, I didn't know anybody who was talking about it. And the pattern on the chart was clear. Before the dot-com bubble, there was rampant speculation in Rhodium, which collapsed during the dot-com bubble collapse. Same thing happened in the financial crisis. And the collapse happened just before the financial crisis, after the banks started collapsing. So The same thing just happened this year. Only I guess this year it was more or less the Chinese stocks and, well, especially the property market and that jazz that seems to have topped rhodium off. And especially if you look at the money metals chart of the rhodium price, something really weird started happening after it already dropped down from it. Well, it ran up year to date. It's not done much, but it ran up all the way to nearly 30,000 per ounce. Then it started falling, like it dropped to 21K in like nothing. And at some point when it reached like 16 or 15K, it started going down in a stepwise manner, literally step by step by step by step, all the way down to 10K. Since then, it's recovered a bit. And on trading economics, where I think they use a different source, because it's a very small market, mostly happens in Asia. There it's like 15K, I should say. But, well, it's that is what it means to invest or even short on the basis of fundamentals. You don't really have to know the exact reason why. You just need to know that a pattern is inevitable to happen. If you know the reason why, well, that's even greater because you can, invest with more accuracy. But as long as you're willing to take some risk, which is why it's a contrarian opportunity, well, patterns like this more often than not work out. It's just historical patterns. History won't repeat, but it will rhyme. So rhodium hasn't gone back to 1,000 like it's done in the other two bubbles, but it has collapsed. So
there you go. Exactly. It has. So I guess the wind is out of the shorting sales on that, right? You wouldn't say.
Oh, I wouldn't touch it right now.
Yeah.
Simply because it seems that after it dropped so much, and thanks to the staircase pattern, one thing I always say, staircase patterns aren't legit. I don't know what's happening there, but it's manipulation. So since I saw a staircase pattern going down in rhodium, well, that was fine when it was going down, but now that it stopped going down, I wouldn't touch it anymore. It just it's too much risk.
Yep, absolutely. And then you called for T. I think you were bullish T. That was flat to up on the year. So another small win. And then
on T, I wanted to mention T simply because people don't think of T as a commodity that can be traded. Most people on basically anything in their life just use things, and they don't ever stop to think about, well, hang on, how many other people use this thing? How popular is it? And how popular is this going to get more popular or not? And that happens for stuff that's rising in popularity, where people say, nah, it's never going to happen. And then it happens. But it also happens for stuff that we're all used to being cheap and then stops being cheap for a reason. Well, T hasn't moved up with all the other commodities, which purely by analyzing that sentence, should you know that should present an opportunity in the future. But one thing that has happened to T is its historical previous historical pattern of the last 10 years going down. Well, that's now definitively broken. It's no longer going down in a trend line since 2009. It's now going sideways. So as long as it's going sideways and as long as it's cheap relative to everything else, supply is going to drop. Same thing as every other commodity we've talked about so far. Until that supply hits rock bottom, and you got to remember that T is actually a very, very popular commodity. It's just that we've gotten used to it being cheap. Well, if it runs out, price is going to spike again. So, T hasn't gone up yet, but since it hasn't gone up yet, it should.
And then the last one you talked about was tech juniors. You wanted to fade the big tech majors and look at like the very early stage tech companies. And you left that open-ended saying, guys, do your own research and find the exciting potential there.
Yes. So, we might as well talk about the one industry on the list that I'm any sort of bullish on. obviously, so far we've talked about a lot of commodities and fundamental situations for them, and some of them are going to go up. But most of those situations kind of were already there at the start of last year. I just wasn't aware of some of them. So as far as completely new sectors go that I think will do well in the future, during 2021, I've come across multiple news messages from various locations, mostly within the US, of 3D printed housing starting to take off. The last news message not too long ago, and I actually tweeted it at you, was that a developer was going to construct 100 3D printed houses in, I think it was Las Vegas or something, and it was the biggest project of its kind. So I work with a system, as far as news goes, with that's based on rumor. And you might think that's crazy, because how are rumors even reliable? Well, every fact starts out as a rumor. Somebody says it for the first time. And generally, when somebody comes up with something new, no one's going to believe it. So I also say one data point does not a pattern make. You have to also take this into account. So I work with a system of rumors, persistent rumors, confirmed rumors. This means that if I hear it once, it's just a rumor. So I've seen disparate messages about 3D printed houses come by, just like I've seen 3D printed every object come by. And I don't think there's a market for 3D printing everything. 3D printing metal sheets will never be as fast as simply stamping it with a heavy weight. So I'm not interested in that. But when I see multiple messages within the same sector coming through, then it's more like a persistent rumor. Like, it's still a rumor. Like, it doesn't have to go anywhere, but it's not going away either. And that is the kind of thing that draws my attention. When something keeps happening, even though people keep saying it's just a rumor. Now, obviously, there are some requirements, like the first rumor has to be disconnected from the second rumor, but they have to happen within a certain time space of each other. Because if it's just a regurgitated old news rumor, then it doesn't matter. No, they have to be unique events. But if they are, and they start happening faster or more expansively, well, then it piques my attention, and I call it a confirmed rumor. It's still a rumor, but it's a rumor that's happened so often that it warrants my attention, and it warrants me looking deeper into it. And from that point onwards, I start discovering fundamentals, and then you get into proof, So in terms of 3D printed housing, I've seen now multiple small projects get started up. So multiple companies working on the same problem and coming to solutions. And I've now seen those small developments start up in various locations, like one in Florida, where it's just 1 or 2 or 10 houses, something small like that. But we've now seen the first bigger project, a scale of 100 houses. And housing, even when it's 3D printing, isn't cheap. At least not now. Definitely now you pay an early adopter price. If not in cost, then definitely in terms of form and function. It's just not going to look as good as a regular house. So you buy it for the novelty. But the fact that they think they can, well, even in Romania, but then still deliver 100 of these houses and sell them, that means that somebody thinks there is demand. Somebody close to the ground, somebody who will have done a lot of research in this, because if you're starting up a new market, you better be sure you have buyers lined up, because otherwise you are not going to make it, my friends. You are just going to end up in a pile of history. So it's starting to get interesting, which means it's starting to get interesting to look for companies which are succeeding in this space and are looking like they have the best chance in growing as part of the first wave of these companies. Because there's multiple ways to get rich. One of the ways is do something really well, but another way is just be the first one to do it. It doesn't have to be done well if no one else is doing the same thing, because then it's a novelty and people will, if it has some use, like a cheaper house, which has a lot of use, people will demand it. Now, when you look towards the future of housing, something's going to happen that you need to keep in mind. And that is real estate, relative to everything else, is going to crash. But again, with hyperinflation, the price never has to go down. Bricks are still bricks. They take place in reality. They have somewhere that's, where they're built. So that will always have some sort of value. It's just that while the price of living goes up, meaning like food, water, everything else, less and less people will be able to actually afford their mortgage. They'll just declare bankruptcy, which means the house will get sold, which means housing supply goes up. And since in inflation, all prices are going up at the same time, you can state that housing demand in general will go down and housing supply in general will go up. So how is this going to balance out with inflation? Well, I looked up research from Argentina, because if you want to know what happens in hyperinflation, just look at the last 9 times it happened to Argentina. Housing prices in Rio de Janeiro, I'm not entirely sure about the numbers anymore, but in general, nominal prices increased by 2 to 3%. Real prices adjusted for inflation dropped anywhere from 35 to 60%.
Wow.
Yeah, that's simply the kind of thing you have to keep in mind now going forward. That if the price goes sideways at 0% and you have 6.2% inflation, you lose 6.2% on whatever it is that goes sideways. And yes, in silver and gold, since that's the one I said to buy, that does mean that since silver has gone down 13% or 14% in price year to date, that means it's actually gone down 20%. That's just how it works. The gold and silver bugs can say it holds value as much as they want, but I'm sorry, that's just not how it works. Over a very long period of time, yes, it will hold value, but over this year, it's lost value. Simply because everyone else measures values via dollars and the dollar price has gone down, which is also exactly the reason why they manipulated that price down, to create that effect and keep everyone away from it. Because once that stops and gold and silver goes through the roof, everyone will suddenly remember what gold and silver was used for. And then hyperinflation really happens.
We covered a lot of assets, but do you have anything else that you want investors to look forward to in 2022? Anything you want people to be thinking about?
All I can say is protect yourself. Even if you don't think it's time yet to bail out of the markets and go into gold and silver, because eventually the physical supply will run out, but that's eventually. If you want to get very large orders now, like if you happen to be a multi-millionaire listening to this, and you're looking at putting like 20 or 30 or 40 million into gold and silver, and you're wanting to time it right, don't wait. For those amounts, don't wait. But if you're just a regular investor like me and you're thinking about, well, maybe $10,000 worth of silver or 5,000 worth of gold ounces, when should I buy that? I can't say when the comic scam ends. You should already be in. You should have a small allocation at the very least. But when you should rotate out of the rest of the stocks because they're going to crash and go to gold and silver, God, I can't call that. That is personal responsibility. Since I basically rotated out of cash into gold and silver in 2019 or the end of it, and I haven't had regrets since. My buying price is lower than everyone listening right now. You got to keep that in mind. Not many people actually remind you of this fact, but when somebody says you should buy this or you should buy that, either find out or just ask them, what is their average buying cost? Like, from what point are they reasoning you should stay in? Because, you know, Michael Saylor at $60,000 or $68,000 per Bitcoin is saying mortgage your house and put it onto Bitcoin. Bitcoin's not 60K right now. It's like 47K. So people who mortgage their house and put their money into Bitcoin already lost like 20 or 30%. And if they panic sell, they're never going to get that money back. If they don't panic sell and the price doesn't go up, but it just drops through the floor, they lose it all. So that's just a massive amount of risk. And if there's anything you should do in 2022, it's to minimize your risk as much as you can, even if that costs you a little bit of potential gains. Simply because it is a dangerous world out there right now. And last year, there was still time to fuck around because the CPI just wasn't that high yet. But now it is. And the CPI itself is also manipulated. So the real inflation rate is much higher. Everyone knows this. So God help us.
So where can people go to keep on top of your updates throughout the year and learn more from you?
Yes. So I've got a few more things this year. You can find me on Twitter still. Deso Games on Twitter, at Deso Games. You can find me on Twitch, also Deso Games. I'm basically Deso Games everywhere. I have written books in 2021, which you can now purchase. They are called The Definition of Money, The Definitions of Value, and Ethereal Value and the Crypto Future. I would highly recommend the third one to anybody even remotely interested in crypto, because it will save crypto's ass after the purge. And it's going to take a few years for people to realize that, but you can read it early. They're only in ebook form right now. I'm still working on the audiobooks. I've just been extremely stressed and it's not been working out, but they will come in the near future. You can find those on basically most digital storefronts, Apple Books, Amazon, Reading, Kindle, whatever. I'm not entirely sure if you need an e-reader for it, but you can just find that out yourself. In 2022, I should also be starting my own company. It's not something that other people can invest in. Eventually, I'll have opportunities there, which I'll just create myself. But that's not going to be a near future thing. It's just going to be something to, I don't know. If you're interested in me, follow me on Twitter and just you're going to see updates on that pass by every once in a while, or, you know, during my streams on Twitch. And yeah, my Substack, I nearly forgot. I already mentioned it before, desogames.substack.com, where if I've got a long form article to write, that's where it ends up. I still have got a backlog of stuff I want to write on, but nothing's really interesting enough right now, and stuff like Omicron keeps happening. So I'm constantly busy with daily market stuff. But I do have a long article in the works, which will finally detail my fucked up past by going into excruciating detail of every run-in with the system that I've had in the past. Basically, everyone who's ever been a civil servant and done me wrong. Not to spoil anything, but just to create a little bit of well, I wouldn't call it excitement, but interest, I suppose. So I've already survived killing myself 6 times, 3 actual attempts and 3, you know, desperate attempts to make sure I didn't actually jump in front of a car or something. And I'm still alive. So if you want to know what kind of mind makes that in the end, well, I'll have probably 40,000 words on that out. I don't know. I don't think it's going to be this year, but I'm taking my time on this one, as you might imagine. But yeah, sometime next year then, after Christmas at least, and you get to read about my incredibly fucked up past. And it'll inform you on how I think, why I think about value that I do, why I am so quick to poke through people's bullshit and call other people out. Basically, I was bullied a lot. That's the short version of it. But it'll be quite a read. I can promise that it'll be quite a read. So that's coming in the future, along with any other article whenever I find something interesting to write about.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.